Today, we're talking about sidestepping a common investment error that can be costly and prevent people from achieving financial success. We are talking about the herd mentality. Since the dawn of time, humans had an advantage to following what the group did. This kept them safe, especially in caveman times when we would be protected by following what the group did. But now in a modern environment with financial markets that require a consistent and balanced perspective to achieve success, following the herd mentality, particularly when it runs hot with greed, can lead to significant financial mistakes. This has happened throughout history, going back to the 1600s, and people were diving into investments in tulip bulbs, which rose from their ordinary prices to being more valuable than some of the nicest luxury real estate, because people in certain circles were seeing their neighbors investing and making thousands of dollars in a quick buck, and then all of a sudden fueled into the belief that this would continue and they could experience similar success. The same thing happened to Isaac Newton, one of the brightest minds the human race has ever seen. Saw his associates at cocktail parties talking about how much money they had made in trading shares of the South Sea bubble. Isaac Newton decided to get involved himself, putting 20,000 pounds near the top of that bubble, fueled by financial engineering, only to subsequently lose over 90% of its value, creating losses for Isaac Newton that exceeded $10 million in today's value. Fast forward to today. Think about FTX and the celebrities that had access to accountants, advisors, lawyers, all getting involved in investing in FTX and accepting their promotional deals, which attracted thousands and thousands of investors. Did they even look at the red flags, or were they lured by the herd mentality, seeing other bright names get involved and excited by the trend of crypto and present excitement in the broader investment community over the prospects for the future there? Did they look into the financial audits? This company had never been audited by a financial firm publicly, had never been audited by a big four accounting firm, operated a hedge fund touting outstanding returns, but with opaque processes into how those were achieved, and offering compensation in the form of an FTX token. Does anyone ever know what an FTX token actually means? Well, they subsequently became worthless when the company went under. As you can see, from tulip bulbs to the South Sea bubble to FTX, there's nothing new under the sun. Market environments and the dramatic swings up and down brew these powerful emotional currents that provoke individuals to potentially act contrary to their rational investment practice. This can be the pull of greed, but it can also be fear threatening to run mayhem through its impulse over a sound long-term investment plan. We're here to help our clients not just navigate these market and economic environments, but also guiding them through the emotional currents that all of these environments will inevitably provoke. Rest assured,